The next two videos talk about the research that I've been doing with Daniel and Arben. As you know, they're my first year PhD students, and they've both published papers on Bitcoin derivatives. So I'm going to be talking about Daniel's paper in the Journal of Financial Stability in October 2020. And it's about price discovery on unregulated exchanges. I've done quite a bit of research on price discovery with my colleagues in Peking as well. And also this one on the right was with a MSc FRIA student for their dissertation that they did under my supervision, and then I worked with my Peking colleagues to turn it into a paper with Hamish Massey. Okay, so a few papers if anybody wants to read some research papers in order to get some ideas for dissertations. So I'm just going to be focusing on the paper I did with Daniel, and we studied regulated and unregulated futures contracts, the CME, where the contract size is 5 Bitcoin, BARKed, where the contract size is 1 Bitcoin, and CME issue them monthly, BARKed issue them daily as well as monthly. Settlement is cash in dollars for CME, but it's a physical Bitcoin settlement in BARKed, and they don't trade at weekends. And the same maker-taker fees apply. But on these unregulated futures, well, the size of the contract, the BitMEX is just $1, Deribit is $10, Huobi is $100, Kraken is $1, and OKEX is $100. So there are lots of different ones. We just chose the quarterly. Huobi do weekly and quarterly, Kraken monthly and quarterly, and OKEX weekly and quarterly. But we did just choose the quarterly ones. Margins are tiny, a bit more on Kraken because that's in the US. OKEX has only 10 times leverage, as we saw, so it's 10% margin. But these have 100 times margin, 1% leverage. I mean, 1% margin, 100 times leverage. Now, the trading days are 24/7, and the delivery date is the last Friday. And you can see that the fees are minus 2.5 for the makers, minus 2. So BitMEX, Deribit, and Kraken are encouraging wash trading. Kraken's well known for its wash trading practices, unfortunately. But Huobi don't offer any maker rebates, nor do OKEX. On the perpetual swaps, quite similar. And again, only OKEX doesn't offer maker rebates. When we look at the relative trading volumes, in the spot market, we have Coinbase and Bitstamp and Bitfinex and Kraken are clearly the biggest spot exchanges. This is taking the data as of January 2020. So the monthly volumes were compared. Panel B is in the futures markets, where Huobi, at that time, Binance didn't even appear. But things changed quite a lot during the course since this paper the research was finished in January, and Binance have appeared as a very strong player since then. The perpetuals market, there's BitMEX, OKEX, Deribit, and in the overall market, the Huobi futures and the BitMEX perpetual together take 75% of the trading volume overall. And the total trading volumes, when you include the leverage that you can get on derivatives, clearly the trading volume's much greater on derivatives. And we've looked at Bitcoin and dollar amounts. So On the right, it's in dollars, and on the left, it's in Bitcoin. Now, looking at the price leadership in the spot market, I won't go through the mathematical model we used. It's something called a vector error correction mechanism. And if you're doing econometrics, then you may come across an error correction model and a vector error correction model. That's a sort of multi-dimensional, in this case, a 10-dimensional error correction model. And that will allow us to look at lead lag relationships and see which market moves first. We used minute level data, so it's very, very high frequency data. And things haven't changed much over the period, apart from the facts that Binance US started getting quite a big share of the spot market when it was introduced. Otherwise, things are quite stable, with Coinbase, not surprisingly, being the price leader more than Bitstamp. When we take all the instruments together, though, the Huobi futures and the OKEX perpetual and the OKEX future and the BitMEX perpetual together account for more than 60% of the price discovery. And it's only after that. And then CME also has a little bit of price discovery role, but not as much as the other futures contracts.